for example, more trust from the side of the consumers? How can technology help us to create demand for insurance? How can technology help us to expand access to insurance? And this is where I want to have a little bit of your experience. And we have 3 chairs here. So I'm going to call for 3 people to come to the front and start sharing a little bit their experience around technology and insurance and how it can sort of provide, I would say, like the 3 main things. One would be access, trust, experience. How can it help us to better target the needs of clients? And whether, and then the last thing that I would ask you, whether you have something that remains open in your mind that you would say we would like to discuss this further around technology. So this is the idea. We have 3 spots. Some of you will have to come forward, and then we can start rotating people so that everybody can a little bit sort of share some thinking around what's happening in their own different country and in everything. Okay? Est-ce qu'il y a des questions du côté francophone? On est tout bon? Okay. So the chairs are open, and maybe some people can come to the front, and then we can start sharing, and then we will have around, I would say, maybe between 3 and 5 minutes for everybody to talk about their experience, and then we can start rotating here in the front with the chairs. So just feel free to raise your hands when we have. So anybody else that wants to come to the front to share their experience when it comes to their own context and their experience with technology and access, trust, serving client needs, something coming from. And I think the interesting thing that we had in the panel is that we had a little bit of a research institution, we had a regulator, and then we had an organization. And I think we have a little bit of a split on that. So I guess we can get started. So who came first? You came first. So I will let you introduce yourself and 3-4 minutes to share your experience with us.
Joseph Lutwama is my name. Coming from financial sector deep in Uganda. We are a development partner, I could say. We are funded by DFID, and our mandate is to make financial markets work for the poor. So microinsurance is definitely one of the areas where we're interested in. In terms of my experience or our experience with technology, technology is a good thing, and we've seen it do amazing things in terms of accessibility. But I think sometimes we have put a lot of faith in technology, especially in developing countries like ours. I can talk for Uganda. Especially the low end of the market, they don't fully trust technology. They have not yet come to that point where they can trust technology like maybe the developed countries. People trust a lot more the relationships they have. And even when we talk about mobile money, people talk about how mobile money has been a hit in countries like Uganda or Kenya, but you find that most of those transactions are actually done by the agent. Even where we have had regulations that sort of mandate people to transact on their mobile phones, you still have what they call over-the-counter transactions, where people still have to talk to someone to use their phone to send money to another person, because they want to talk to someone, and if they don't understand, they want someone to talk back. So that is still a big issue. Even when you talk about ATMs, where people go to withdraw their cash in banks, you find that most people, they will still talk to the askari or the policeman to help them punch in their ATM pin so they can get the money, because they somehow think that this machine may actually eat their money or may not give them back their money. They're used to actually talking. So you find that we are yet to reach that level where someone can confidently do every transaction on their phone. Even the most affluent, you still find them having a challenge that even after they have sent money, they will try and call the bank to confirm that actually the money has moved or has, So that is a big leap, especially for the low end of the market. So you may find that technology, it will take a bit of transformation in people's minds to begin to trust technology. The other thing I wanted to bring out is just to add on the discussion that we had this morning, the issue of peer-to-peer and products that look like insurance but are not insurance. I think the challenge for the regulators is to have an open mind. Yes, the law defines insurance to be a certain thing, but if increasingly you're getting products that look like insurance and they're becoming popular, that should tell you something, that probably what you're regulating is not appealing to the public. It's not meeting the needs of the public. Then probably you need to rethink in terms of the scope and you're thinking about what you're regulating. That, I believe, is what will make you a progressive regulator, always being pushing the boundaries and opening up new areas. If always we thought that, yes, so I think those are some of the things that I want to share about. Yes.
Perfect. Thank you very much. So I think just to summarize a little bit these points, I think you speak a little bit limits of this insurance technology. That technology is not for the sake of it, but it has an objective that we want to achieve. And I think you bring one of the most interesting points that I think in the work that we have been doing is like when we start using technology, what is a low-touch, high-touch approach is like when you get further away from your clients through technology, how can you keep this human element of trust around technology? And I think the other thing is the emergence of new models that look like insurance, may not be fully defined as insurance yet, but that they are coming to clients and that they are being sort of part of the environment that goes around risk management and that needs to have this consideration around regulation. So thank you very much. Maybe we can have, and maybe you can go back to your place. We'll leave a chair open so someone else can come and take a spot in this chair to share an experience while we move forward with Luc to share something with us.
Yes, I'm Luc Nobisi. I work for CIMA, the insurance supervisor for French-speaking countries. So I see a couple of people from CIMA in the room, so I will speak in French to make sure that my message is not biased. Donc, avant...
Before joining CIMA, the regulator, in 2012, I spent some years, about 10 years, in the insurance market, where I worked a lot with technological innovation. And some years before that, before the era of mobile money, mobile insurance, and the rest, we were among the pioneers in Cameroon, because at that time I thought that there was very little innovation on the side of the market. And when I joined CIMA, that is the regulator, in 2012, I was introduced into the projects of preparing micro insurance projects. And we wanted to show the willingness, or demonstrate the willingness of the regulator to support the innovation. So in 2012 2013, we tried to show that micro insurance could be sold by mobile telephony. And as a regulator, we wanted to show that it could be a solution. In 2014, we organized the CIMA with FANAF, and we organized the learning station, that is the learning station, to share the experiences in the entire world. And one of the major lessons that emerged from that meeting is that the mobile insurance could be a vehicle for development. Except that 4 years later, and so 4 years on, we had the feeling that there had not been enough innovation coming from the market. And we had the feeling that since the discussions with insurance seemed to say that the regulation was too rigid and did not and was not sufficiently flexible to accommodate innovation. And I would like to challenge insurers that I was there in the insurance market and I observed that there was not enough innovation. And currently the regulators are willing to support innovation, but we are not seeing a lot of innovation from the market. So it is not regulation alone or by itself which will make people trust insurance. An insurer who does not inspire confidence through their practices, even with technology, they would only succeed in increasing the fear or rejection. And so technology is a tool, but the players on the market need to change their mindset in order to, first of all, get the confidence of the market, and the confidence is there. The regulation is quite dynamic, but it looks as if there seems to be a hitch somewhere on the side of the insurer.
So I think he brings a very important point, which is a little bit what we were hearing from Kenny and the regulator on how do you foster innovation, how do you engage with the market while trying to create this balance between consumer protection and actually sort of pushing the market forward. And there seems like they're struggling a little bit on like how to bring the market actors to bring new ideas to the market. So I guess that this can be something we will be able to discuss tomorrow a little bit together on how to create mechanisms to engage with the market. There's a chair empty in the middle, so someone can take that spot and maybe we can continue here.
Merci de...
Thank you for giving me the floor. I will speak French. I am the Director General of the Regulatory Agency of the Republic of Burundi,
de la communauté est-africaine, mais aussi
and also of the East African community, which is a transition between East Africa and Central Africa. And my intervention will dwell on two issues. The first one tails into what my predecessor has said, that has to do with the development of the insurance sector, and that is which calls for the promotion of new technology, that is new information and communication technologies. To my mind, it seems that technology is a technical aspect, definitely for the promotion, but the issue is the substantive issue is one that has to do with the very definition of
quel produit d'assurance
of the type of insurance product that must be promoted and how to go about it. And I would like to also mention the major question of micro insurance in certain countries such as Senegal or elsewhere. There is already the micro insurance sector, which is in place, and also in the agricultural sector, which is a good thing. But in other countries, I think that there may have been others who have created mutual assistance funds for the agricultural sector. And I would like to have some experiences with regard to this approach. In other words, this method which puts forward micro insurance in the agricultural sector and the support fund, the assistance fund, because there are many uncertainties, for example, and the issue of poor rainfall and so on, and given that very few people actually make a lot of profit in the agricultural sector. The two approaches compatible, and can they be applied at the same time, or should there be a demarcation line between the two, or should the two be promoted at the same time, but to what extent that is one in relation to the other? And it is only then that one can talk about the technical tools and any other thing that is necessary as the technical tools to so that we are then looking for the exact definition of how to go ahead with the micro insurance and what. So that one could also decide on what type of associations which could benefit from this in the area of agricultural development. That's the first part of my intervention. The second part also raises has to do with the key issue of regulation, for where the regulator has to be practically at the center of the two imperatives. The first, which is the protection of the consumer of the insurance product, and at the same time promote the development of the market. And without searching too far, at least at first glance, one could imagine that the two aspects could seem to be in conflict, but in reality, when the consumer protection or the insurance, the protection of the consumer of the insurance product is protected, of course, naturally more people will be interested, and there will be an increase in the number of consumers. And on the other side, if it is the market, the development of the market which is promoted, automatically the one would also be aiming at positive results on the side of the insurance companies, and since the results or the outcomes will be positive, obviously investors will rush towards that sector, because the sector would be considered as profitable. And so whether it is the increase in the number of consumers or the increase in the number of insurance companies, since it would have been considered to be a profitable sector, this would all contribute to the development of the market of insurance, and so. Yeah. So from there, in a situation like this, couldn't one try to find what parameters to find the happy mean to facilitate cohabitation, or to guarantee the promotion of the protection of the consumer, as well as the development of the insurance market according to law. And if those parameters are defined, what will be the indicators and what will be the optimal level, so that the regulator will be at ease. Thank you for Burundi. Thank you for the participation of Burundi.
I think there's, for me, two very relevant points here. I mean, I think you brought up a crucial point, which is a little bit like whether we can reach out to rural populations with the same kind of technology solutions that we are reaching out urban population. So I think that is a good discussion, provided the importance of rural population in African countries. And I think the other thing that I think it's very important, it's a little bit like how to create a market that can create positive results, so that investments can flow into this kind of initiatives. I think if there's no investor money flowing into this kind of fintech or InsurTech initiatives, I think we will still be in trouble to foster the growth of that. And I think then there's what's the role of regulation for that. So now we're going to pass to Senegal. So Momat, you can share your experience with us.
Il va aussi prendre la parole. 4 minutes seulement.
Thank you. Well, first, people are wearing their headphones. I would like to talk about a personal experience with regard to technology. Maybe my friends in Kenya and Malawi, especially who have talked about agricultural insurance. The agricultural insurance concerns majority of African's population. We are members of the African risk capacity, and to scale up our activities, that is to reach the largest number of farmers, we use.
We are facing a real problem.
And yeah, we are using index-based insurance. So, for example, an American satellite which gives us the data on the situation on the farms makes a lot of comparisons. For example, the rainfall patterns, and we were told that the rainfall wasn't sufficient, and so when we sent experts on the field, what we were told was it turned out that that wasn't the case, and so the African Risk Capacity Insurance Limited. We decided to ask this question. That is beyond this insurance. We had an agricultural insurance in Senegal, which also uses satellites to reach many farmers. This did not happen to us, but it could. What do you think about this with regard to the development of micro insurance? Thank you.
Merci, Mohamed. I think this brings a good point, and I think this is not going to be only about index insurance. What are the risks linked to technology? I think in particular here when we are talking about the operations, when we're using technology on the operation of an insurance product. So I think this is an open question for a discussion later. There's another chair empty now, so someone else can feel free to step up to fill in this place. And now we are coming back to the Anglophone world.
Thank you. Probably I can start with what my Ugandan brother said on the issue of trust in technology. I'll use the example of M-Pesa. And from where I sit, people talk of the success of M-Pesa, but the success, the bigger part of the success of M-Pesa has been by the fact that M-Pesa on its own has actually served the purpose that it was intended to do. In terms of if somebody puts his money in M-Pesa, they are 100% guaranteed they will get it. So the success is not purely on the technology, but on the fact that I will get my money back. So when we started the conference, the senior minister talked about the peculiarity of Africa, and especially with regards to compliance with the regulations. He said we have so many regulations, but the problem is they're not being enforced. So let's now go to microinsurance. We want to promote insurance to the more needy people who cannot afford the conventional insurance products. So the issue is, if we bring them on board based on the current level of enforcement, there's a probability there might be a backlash. You might bring on board 3 million new policyholders, but when it comes to paying of claims, if the claims are not being paid on time, then the element of trust is lost. And all the effort that was being put, all the research that has gone into creating products to this particular group of people will be lost, because once bitten, twice shy. Once they went to a company to be paid a claim, they were not paid. I'd say all the efforts put in microinsurance will be lost. So I'd throw it to regulators to take it upon themselves, especially when it comes to microinsurance, to make sure that the policyholder is protected to the maximum.
Thank you. So we have two more spots here in the front. So some people can come to the front, and I think this touches a very important point that I was talking about, trust, and how I think this is a question, but maybe someone here has an example on how are we using technology to improve this experience, this trust in insurance. This is our concern, but I think maybe there's examples on like how are we better paying claims, for example, how are we doing things in a better way, and maybe we're missing one example. So I see one raised hand there, so maybe you can come to the front once there's a chair open here and share your experience with us on that. So maybe we can move here.
Possibly this example will address the issue that you've raised. It's specifically South African, and it's specifically dealt with a community that was prejudiced and victimized because of the fact that they were HIV positive. And an insurance company set up and used technology to remove human interaction on the policy acquisition side. So people with HIV did not have to deal with a broker or an intermediary. They could go directly to a particular insurance company and share all of their details personally, one-to-one, confidentially, and it removed a lot of the stigma of being known to be HIV positive. I think more importantly, what technology further allowed this insurance company to do was to introduce the concept of continuous underwriting. So typically on the life insurance side, you apply to an insurance company, you get assessed, and you get allocated a particular premium, and so long as you pay that premium, your cover continues in force. With All Life in South Africa, again using technology and primarily USSD to mobile phones, every 6 months a message would go out saying you need to go for a blood test to see whether your CD4 count has dropped to the level that you need to go on to antiretroviral treatment. And people would go for the test, and the results were purely between the laboratory, the insurer, and the insured. So again, the technology protected confidentiality and provided a lot of comfort to the insured to go for the tests because they knew their confidentiality was not going to be prejudiced. And it actually changed the dynamic. So before, people with HIV in South Africa were told you have a death sentence, you're going to die. This insurer provided them with the motivation to continue to go for blood tests to make sure that they maintain their health. The significant additional benefit of using the technology was that the premium rates charged to these people came down dramatically. So prior to All Life, people could get cover when they were HIV positive, but premium rates were prohibitive. Once All Life came into play, premium rates halved, which made insurance a lot more affordable. And once people have insurance, they can gain access to the broader financial services community. They can take credit, they can buy houses, because typically those institutions require insurance as collateral when they lend you money. So it changed the dynamic fundamentally. But the key message was the technology that allowed it. There was trust in the technology, and it maintained the confidentiality at a point in time where there was a lot of stigma attached to the condition.
Thank you very much. So I think I believe there's two things here. I mean, one is trust, but I think the other one is that technology can help us to broaden the base of clients that we work with, and also helps to have a broader client base and diversify risk. So I think this is interesting. It's not only about trust, but also sort of giving access to more people. Then maybe we can. Yeah.
Okay. Thank you. As we appreciate the use of technology in promoting the microinsurance products, one of the elements that the usage, especially for the life product, in terms of continuity and in terms of persistence, you realize that in the conventional insurance, majority of the time, the agents and the brokers keep on reminding the insured on the issue of the payment of the premium. And you find that in the process now of the use of technology, by the fact that there is no human face, you might find that the majority of the policies lapsed, and there is no that issue of persistence. So I think it is an issue that even as we develop the regulation, the guidelines, is an area that we need to address so that we can be able to ensure that there is issue of persistence in the policy uptake. That is one of the challenge that I find that need to be addressed. Then on the second element, which I also realize, the kind of the target market that we are targeting for the micro insurance is the mass population in the lower income, and the majority of them are, the level of illiteracy is a bit low. So even in the issue of embracing the technology, you know, the technology is changing very fast. So the people that we are targeting to uptake the micro insurance product, majority of them to embrace the issue of the fast growing technology could be a challenge. And especially even in the use of the smartphone, because majority of the insurance companies that are going to sell micro insurance product are going to have kind of the apps in the smartphone. But the people that we are selling this product, they don't have this infrastructure, they don't have this kind of handset. So it's an element that can also be addressed.
One question. What country are you coming from? I mean, Kenya. Okay, perfect. Just to know where the different experiences are coming from. I think there's a very relevant point here, and I think I would call that fine-tuning of the technology, is that whenever we start implementing technology, we have certain hypotheses around like what is going to be this technology working like, what will be the impact, but it may not always be the case. So I think there's this element around like, how do we make sure that what we were intending to do is achieved with the technology, and whether that needs to be changed or refined in order to achieve that. So I think that's a very relevant point on using technology for the first time. There's an empty chair in the front, and in the meantime, I will let Mia share something with us.
Thank you. So I want to talk to the question of access and the extent to which technology has allowed us to extend access. And one of the groups that I see increasingly covered to some degree is small businesses. So one of the things that's always been very difficult is to provide non-life cover to small businesses for small productive assets, the fridge, the microwave, the cell phone, the television. And a lot of those kind of things have been very difficult for traditional insurers to provide affordable cover for. And I think there's interesting new technology, like, for example, Cover app in East Africa that's coming through that allows you to take a photo of the asset that you want to insure, and there's a specific cap of payout to all the typical categories of assets that you would want to cover. And they also have very exciting methods of assessing the claim for payment. So they look at things like where the photo was originally taken, so the GPS location, etc. So they've got interesting scoring mechanisms to figure out whether your claim should be paid. And if that claim is high risk, then they add a human element to whether the claim is paid. But if it conforms with all the normal risk factors, then the claim is automatically paid out into your mobile money account. So I think something like that is a very interesting example of how you can help small businesses to get paid out with technology. Other examples are things like there's a few companies working now with Uber drivers, for example, to provide cover. Wazinsure provides cover for taxis as well. Another one that I found very interesting while we were doing our catch-up for the new database was around screen replacement for smartphones. That's also often a very critical tool for a lot of small businesses. What I think it's called something like Smart Buddy allows you to do is you have to look at 161 advertisements a month, and for that you get 2 free screen replacements a year. So I thought something like that was very innovative. Of course, it takes a bit of time to watch the 161 ads, and you can talk about the ethical implications, etc. But I thought that was a very interesting way in which you can use technology to get reasonably affordable cover for your phone. So anyway, so just some interesting examples for SMEs.
Thank you. So we have 2 empty chairs. So I don't know if there's anyone who want to come up and share something. I don't know. Someone else wants to share anything? Just feel free to come. In the meantime, we can come with this experience here.
Okay. My name is Nike Joseph. I'm from African Alliance Insurance PLC, a life insurance office from Nigeria. Technology has helped my company greatly, especially in this particular area, microinsurance, because I sell a product under microinsurance, which we sell naturally to the downtrodden, the market men and women, the artisans, Okada riders, and the rest of them. Initially, when we weren't using technology, we were collecting money directly from them, and you can imagine the huge premium misappropriation that we experienced, because there was no way customers could get to know how much they had with us until the point of claim, which is a year, after a year. But when we started using SMS, when we started sending SMS to customers, then we were able to discover that within a month, huge sum of premiums are misappropriated by members of staff. But with the use of technology, we've been able to reduce that drastically. Customers know their premium account position at the end of the month. Now we want to take that higher. Now we want to use USSD such that customers can access their premium account position at any point in time. Another way that technology has helped my company is that customers now have confidence. It has boosted their confidence in us. They trust us the more. They can see us online. They can access their account. They can even have their statements of accounts. In another way, technology has helped my organization in claims payment. You know, I said we sell to market men and women. Most of them did not have bank accounts. Then at the point of claims, we have to pay them cash. We have to take cash to meet them in their markets, the artisans in their shops, the Okada riders at their parks, taxi drivers at their parks. But later on, we introduced them to banks. We helped them in a way. We opened bank accounts for them. And from there, we took it to the level of doing transfer. So within 2-3 days, their claim is in their account. Unlike before, when they had to wait until whenever we arrive that their money will come. So technology has really helped my organization tremendously. That's it.
Oh, so it's working. So thank you very much. I think what is nice about this intervention is that there's different points on the business where we can use technology. And I think that's extremely interesting, that we sometimes think it's always on the front end with contact with clients that we can use technology. And maybe I think there's missing someone, and I don't know if there's something like about data. I don't think we have heard anything around data on how we can use technology around data. So I mean, it would be interesting if someone here knows something or has seen anything around that. And now we have Mr. Ndiaye from the FANAF.
Merci beaucoup.
Dans ce domaine de données.
Yeah, I had the privilege of working on these problems related to the use of technology, and I must say that it is technology makes it possible to reach the client. It makes it possible to manage the contracts and to keep proper data, and also to monitor the activities, and it's very important. And it is easy to do things within a short space of time. In microassurance, whether it is agriculture or index-based agriculture, we have had to do with very favorable, very rather fragile situations. We needed to be reacting very quickly to situations, but the technology, as it is always said, comes with a cost. And in many of our countries, the size of the activities are very, very small, and the costs are very high. And often then we have to recourse to intermediaries. And for example, there are the mobile telephony companies and those who invest in the platforms, and those who also have to reach the base, that is those who should be insured do not do it for free, and their activities may not always be in line with what the regulators want and what the companies desire. A short while ago somebody said in spite of the activities of CIMA, and people don't seem to have felt the impact of technology at the level of insurance, and reforms have been introduced in CIMA and others, and it is necessary to invest in order to reach the those who seem to have been excluded for a long time, and it's as if the insurance companies should support the totality of the activities, and we needed to reach the populations by going through mobile telephony, and so most of those people are often outside the protection of and it is not within that type of framework that you could reach all the people who should be protected, and so the issue is whether to stress the need for wider financial inclusion or work towards the drastic reduction of the cost of insurance. So for regulation, as far as the regulator is concerned, micro insurance is insurance, and it is necessary therefore we need a different philosophy in dealing with
I think he's brought up for me an extremely important thing. It's around the costs of technology and how to create viable business models that can function in the market. And we had spoken about that before. It's like technology should allow us to have scale and a good experience in order to have the money that is required to invest in these things, but it's a very relevant point. I think the other thing that hadn't come up before is around data protection and how all this data that is being created or that we're having access through all this different technology, how can regulators touch this part? And I think it's a little bit around this thing on like it's financial inclusion, but at what cost? I mean, like how can we use technology always as a way to reach more people, but also having a little bit of this cost element or other things that we could be sacrificing around the right information to clients, the good experience, and so on. So I think it's a very interesting point. We have two chairs empty, so someone has something that want to share with the rest of the audience about the experience. I think we have one participant. So
hello, my name is Francis, and I work with IU Ghana. IU Ghana is a microinsurance provider, and we rely about 99% on technology in delivering our services. There are 3 points that I want to share my experience with you. My business partnered with a telco, so we use telco to offer the solution, and some of the things that we are leveraging on together with technology is, first of all, in creating our awareness, because we have a telco partner, and the telco partner is a leading partner in Ghana. If I want to create awareness, or how we are creating awareness is using the resources of the telco provider. So let's say, for instance, if my provider has a subscriber base of 17 million, and I want 17 million people to know about my products or insurance benefits I'm offering, one way I do it, I blast SMS to all of them. And instantly, 17 million people, assuming everybody reads, I've heard about your product. The second thing is that with the microinsurance, you do, because the margins are small, you need to find cost-effective ways of distributing it. Now, we need to create awareness. Another thing that we do is to sell the benefit directly to the people at minimum cost. And how we do it is use interactive voice messaging. When you use, those of us who use mobile phones, if you make a call, there's a caller tune. When it's dialing, there's a dialer tune. We use that to sell directly the benefit to the person. So let's say, for instance, if you're an MTN subscriber, you are calling another MTN subscriber. You can hear a voice like, do you know that you can now get supposed to pay your hospital bills by just signing up to IO Recharge with K, for example. then the people will be intrigued. They will be willing to find out how to do it. So first of all, use it to directly communicate the benefit of the policy to them. Another thing is, because I have to minimize my distribution costs, I need to do target sales. So if I want to do market activation, for instance, where we set up a tent or something to go and interact with customers, I need to go to a place that I can have people who are using my network that I can sell to. So using data from the telco, you can actually tell where, let's say for instance, MTN subscriber is heavily populated at, so that I do targeted entry. So when I go here, I know that this location we can have like 1 million or let's say 100,000 MTN subscribers there who are my potential client. So it makes it easier. Another thing is another channel that we are using to distribute our product is through telesales, where you call the customers to sell to them. Now, if you call the customer and you sell to them, and the person is convinced, the next person that I'm thinking of is who is close to you. So let's say, for instance, if I call you several times in a day, and I've been sold to, then there's a high possibility that if I call you, I will cause you to sell to you, you give me the audience. Probably because I have told you about it, or there's a possibility that you, I heard about this, have you heard about it too? And I'll be able to explain to you. So it's more like referral in insurance sales as well. And that also works a lot in ensuring that insurance gets to everybody. When it comes to trust, it's all about claims payment. The earlier you pay your claims, the better. And it should be easy and convenient way for everybody as well. How do we do that? All our services on your phone is a USSD base, from enrollment to claiming. So you don't need to take a car from your village to come to Accra to file your claim. That will save you the transportation cost. And that makes us to also process the claims quickly and promptly. And with that, people get to trust in your brand and they can always buy your product. Thank you.
Thank you very much. So I don't know if there's anyone else that want to share anything. We're sort of at the end of the session. I think I see everybody seems satisfied. So just a small recap. I think we have seen that technology is a powerful tool. I think there's two things that I take. I think I started saying it needs to sort out a problem from the client point of view, but I think some of the participation here is also like technology is helping to help some of the problems that insurers are facing when it comes to reduce the costs in order to come up with viable business models. So I think it is true. I mean, we can see technology under these two phases as a way to provide more client value, but also as a way to enhance the business models that we're talking about. I think and I think we've seen it. I mean, there's something around like when we see business models that are purely technology driven, but that doesn't seem to be an underlying problem that technology is solving, and everything is sorting out the technology. I've seen some projects in Latin America where everything was designed around the technology solution, but that made it extremely complicated in terms of the products that you could add on, like the communication that you could use. So technology became a limiting factor in terms of like what you were providing to clients. So I think it's relevant to that. And in general, I think it boils down to these questions, like how can regulators create a conducive environment so that new things can be tested, so that we can learn about how this works? And on the other side, how can we create, on the other side, consumer protection mechanisms that sort of put clients first and a positive experience that should be helping towards a viable business model. So those are my conclusions. I think some of these things we will be able to talk in depth tomorrow during the last session, I believe. And from my side, that's everything. I think everybody that took the... Oh, there's someone there, so maybe we can just have a final contribution.
Actually, it's not.
It doesn't work?
There's some information about the use of technology, but I just want to raise some questions, if possible.
Yeah, I mean, let's. Yeah.
Okay, thank you. In fact, it's clear that technology is used as an enabler to make financial services accessible by improving the way we roll out our products, the delivery system, the collection of premiums, how information is collected, processed, and stored. This is how technology is supposed to support both the client and the insurance companies. So far, there are a number of attempts in most of the countries, particularly. I don't know to what extent technology has supported microinsurance or insurance in general in advancing the deepening of insurance business. Because there are a number of attempts, including in my country, but the number of policies which are sold out are very limited. So, to what extent have we used technology to expand inclusive insurance?
Perfect.
Thank you.
So we have one answer already here. So I think maybe you can pass a microphone within your table.
Okay, so I'm coming from MicroInsure. MicroInsure is the leading microinsurance company in Ghana. Sorry, it's not an insurance company, but it's an intermediary in Ghana that started, exploring how to deepen financial services into the mass markets. We learned a couple of lessons over the period. Within the first year, when we carried the Tigo Family Care, which is what we started with, we attained more than 1 million lives on cover. Now, Tigo moved on to another service provider, and then we took up the Airtel partnership, and I'm talking about mobile network operators. And within the first year, again, we had more than 1 million lives. How did this happen? Insurance is not a product that people go to, the shops to buy. People are not thinking about insurance. We have too many, daily needs. We're not readily thinking about insurance as a product that we want to buy. So you want to be able to identify how you can bundle insurance with an everyday used product. And what we did was that we realized that on the mobile phones, people need data. People need to buy airtime so they can keep interacting with people. Now, the mobile network operators also had the problem of, in Ghana, for example, at a point in time, we had about 4 providers. Sometimes it could be 5, one leaves the market, etc. So you have one person using more than 3 different providers' lines. And so the mobile network operators identify the problem of wanting to keep their customers, bringing some stickiness to the customers so that they don't see as much churn. So MicroInsure, having identified this problem, realized that an insurance bundled product as a loyalty product to anybody that is a user on a particular mobile network could help the mobile network retain their customer. And so we provided that service as, once you use, for example, an Airtel line and you recharge your airtime, you get free insurance. And that was how we were able to move the dynamics from almost nothing to 1 million lives. Because then people realize that it's a free offer. Why not just use my Airtel line and then get this offer? So it's really the model. The model became a freemium model that solved the problem for the partner that we're distributing through to a paid product once people had experienced enough free claims, etc. Awareness had been created, so they were now willing to buy insurance.
Okay, thank you. I think there's another answer here.
Just to add to what you
that
said,
okay?
Yeah.
Yeah.
About the viability of it and how it improves
Oh, so is it working or do you need a microphone? You need to tell me. He needs a regular microphone.
There you go.
Okay. For example, I launched a product last month on 5th April. As at 30th April, 15,000 people have signed up. As at 4th, that's for April sales. In May, as at May 4th, 80,000 people have signed up. So that should give you an idea of how such partnership can improve on the financial inclusion.
I think I would make a reflection on two. I mean, my first thinking would be that if we look at the insurance value chain, I think at every point we can see different uses of technology. If I think on the product design, it's sort of this data collection and mining that can help us to better design products. I think we can think of another point, which is enrollment. It's like, can we use technology to enroll clients? Then the other thing that I think everybody's like, how can I better collect premiums? Then I would be like, how can we better service clients? And the last point would be, and we have talked a lot about that, is like, how can we better pay claims and improve the experience? So for me, it's like, when I look at this different, I would say, contact touch points of clients and stuff, it's like when we can totally see like the different benefits that insurance. So in the beginning, it gives us access, but in the claim payments, it gives us a better experience. So I think if we look at these different touch points, is when we can see sort of the impacts on this kind of insurance applications and so on. And I think it's very easy to see that there's different elements. So there's something here in the back. I'll give you the microphone quickly.
Okay. Sorry. Okay. Well, I've listened to everybody, and quite look like we have similar experience. But I quite agree that technology can either leapfrog or snail walk insurance demand, especially for microinsurance. And with our experience in Nigeria is sometimes that the telcos were charging higher, almost 90% of the transaction cost. So they wanted the upper hand. And the insurance companies did not have that kind of muscle, and the regulator had to come in and to, stop the bleeding, so to say. So that's why quite many of us have to go back to another, change our business model. It's either going through the bank or using USSD, because most new early entrants last time I bundled insurance products with telcos, with recharge. When you take up data, when you recharge your phone, and we find out that the telcos were charging us very, very high with insurance company. So a lot of people had to stop. So the other problem we have also is this problem of trust. So many people still don't believe because of people hacking the system, this perception that the telcos, people, they can have fraudsters which actually made demands. So it's kind of affect the uptake of insurance. So while you are going through to tell them that, look, you can take up policies, they also say, is it genuine? How possible it is? But it's gradually picking up and getting better. Perfect. Thank you.
Oh, thank you very much. So this is the last comment then. I mean, I would say let's not confuse a little bit like the cost of distribution channels. And it's like, I mean, and that's not on that I don't think it's a question of technology. We have seen this all over the world. It's like whenever someone has a big outreach that can give us access to more clients, that will have a, let's say, a price, but it's maybe not linked to technology on itself, but it's just like the size of the outreach. And I think that's something that we can talk about commission levels, and I think it's a different discussion a little bit that I think deserves a little bit more on the distribution side and the cost of your distribution partner, and we can see also experiences from other continents that having this kind of discussions and how to create effective regulations around that. So I want to thank you all for the engagement. I think our time is up, so I will give the microphone to Janet.